It's a day when you just want to break into song and sing happy birthday to us, happy birthday to us. But I won't sing because you'll turn off your TV and that doesn't help anybody. Happy birthday, CNBC Africa. Can you believe 9 years old today? It feels like it started just yesterday. Here's to many, many more. Now, let's talk about South Africa, talking about many, many more and a wish of a future that is rosier than its past. South Africa's looming sovereign credit downgrade. Is it really a looming sovereign credit downgrade? It's a possibility. Certainly, there are lots of people who believe that come this Friday, Standard & Poor's, the ratings agency that has us on negative watch, will take us for the first time in 15 years from investment grade to sub-investment grade. And we are a little bit concerned about that. But does it present an opportunity for yield-hungry investors? Every silver lining has a cloud, some say. Others say that every cloud has a silver lining. Let's look at this. The MoneyMakers, I'm Bruce Whitfield. I'm joined in studio, James Turp, who's a portfolio manager at Absa Asset Management. And in our Cape Town studio, we've got the investment specialist at Investec Asset Management, Niemand, to look at money-making prospects presented by the potential of a sovereign downgrade. And more importantly, what do you do first thing Monday morning if we pass this one and we don't get slammed with that downgrade? James, where are we going come Friday? Give us a view.
Well, at the moment it seems that we could, given the year, we could avoid the downgrade narrowly. I think just given the context of where we are and given the preceding move by Moody's, I think we'll just about avoid it. But it is evenly balanced and there's every chance, given when we were put on the negative outlook, that was based on reduced growth potential in South Africa. Well, that has deteriorated further since then. However, we also had the Nene Gate problem in December, which has resolved itself. We've had a much stronger budget. So certain things have improved. We've also got an election coming up. So it's likely that we might just avoid it to get to the midterm budget and see what the scorecard looks like.
You are as chicken as my followers on Twitter. I ran a poll on Twitter the other day, 888 respondents, which in Twitter poll terms is quite a nice sample. 25% said there was a 100% chance of a downgrade. 24% said 75%. Yeah. The balance were either too close to call or absolutely not. So the public at large, I think, Niemand, is pretty divided on this. You've had some interaction recently with Conrad Royce at S&P, and you went on a roadshow, and by the third day of this particular roadshow, Conrad Royce, it was in the immediate aftermath, Louis, of the Pravin Gordhan to be arrested headlines, he was looking quite gloomy, but I think things have perked up a little bit since then. What's your reading of how things play out on Friday?
Yeah, it's almost, Bruce, it's almost an idiot that will only sit and speculate 2 days before the announcement. But if we look at it, it is extremely balanced, and it's actually no surprise that the guys are indifferent as to what is going to happen. For us, if you look at it, if there is no downgrade and the outlook remains negative, then I think it's actually postponing the whole question of a potential downgrade closer to the December meeting, and that will continue to create uncertainty, and for us as investors, where to exactly invest the money and where are the opportunities. However, if there is a downgrade and they do change the outlook to stable, it will be negative in terms of the downgrade, but an outlook to stable does point to the direction that, hey, maybe there's no further downgrades on the line, and that could actually be perceived quite positive in the market. But that is on the off chance. Most likely they will give us the benefit of the doubt, recent policy statements or policy measures that were taken by the government, and they will give us the benefit of the doubt and postpone any final decision to downgrade or not to the December meeting.
And look, I mean, that gives us a window of opportunity, but I get what you say when it comes to the issue of certainty. But we sit in uncertain times. Give me a sense of, if we are looking for yield and we want to be conservative, we've seen the JSE within a 1.5% of record territory just in the last week. The currency is pricing in the potential of a downgrade. Let's say we don't get the downgrade and we go into this 6-month period of uncertainty, as Louis has so clearly painted it. What happens to investors looking for yield, bond investors?
Well, you've got to look for real returns. You've got to look at the inflation outlook for the year, which looks like it's going to average around sort of upper 6s, 6.7%.
Call it 7.
Let's say 7% even.
Makes the sums easier.
Exactly, let's keep it that way. The 10-year bond at the moment yielding around 9.35. then you've got a pretty good real return there, sitting around 3%-ish. And what are your risks? Well, your risks are clearly the same risks we endured in December and most recently, as you just said. So you would probably look to do something with a little bit shorter duration, not to expose you to those sort of whips.
But you look at the yield that South African bond investors are getting on the 10-year bond in South Africa. You compare it to the shambles and the mess that Brazil is in right now. You compare it to the warmongering shambles that Russia is in right now, two of our BRICS partners, and they're not nearly as risky from a bond perspective as we are right now, which is weird.
Right. Exactly. And I mean, just to your point, Russia is sitting at non-investment grade, and they're yielding on their 10-year around 880.
That's a full 100 basis points almost lower than us.
Pretty much, yeah.
But they've got more certainty, or not?
They've obviously had a good year as well. Their yields have rallied lower, so they've had the benefit of that. If you look at our credit default swap, which is ultimately the insurance you pay on the difference between hard and local currency bonds.
That's 300 basis points.
Exactly.
That's huge.
So that's sitting at double B already. So that would suggest that there is room for our yields to compress if there wasn't the uncertainty that we've experienced of late.
Okay, Louis, we don't get a downgrade this Friday. Do yields plummet on Monday?
That's actually no downgrade, but with a negative outlook, no reason why yields should actually move in an aggressive way. And then I think over the next few months, what is happening on the US interest rate environment will probably have a bigger impact on our local bonds and on the currency as well than per se domestic factors. But as we then get closer to December, the nervousness will actually then return. If, however, we do get a downgrade and they change the outlook to stable, we might actually even see the bond market have a bit of a rally and that yields actually come down a bit, considering exactly what James have said so far, is that a lot of the potential for a downgrade is probably to a large degree already reflected in the price. But as you always say, nothing is in the price until it's in the price.
Okay, so Louis, I mean, it's about the certainty aspect then. If we get the downgrade, it's a little bit like, again, I don't know how old you were, but if you were ever caned at school, it was the apprehension of waiting for the caning that was worse than the caning itself. And once it was all over, you went, oh, thank goodness for that. It's done now, and your stress levels drop. It feels a little bit like that waiting outside the headmaster's office ahead of Friday, doesn't it?
It does. It's also the old buy the rumour, sell the fact type mentality as well. So having that stable outlook, definitely, as Louis says, from an investment perspective, it's a soothing, albeit the negative implications of increased funding costs in hard currency and the inflationary impacts of a weaker currency. Those are the negatives. So initially you will have volatility naturally, albeit arguably priced in. You will have an immediate negative reaction, at which point you may find foreign investors actually entering, as the weaker rand has led to some portfolio rebalancing, as we've seen.
Because it's also important to understand, Dr. Adrian Saville from Citadel has explained this to us. Just because one ratings agency goes to sub-investment grade on our dollar-denominated debt does not mean that we are junked by everybody at the same time. We don't fall out of the World Bond Index until all three of the ratings agencies put us in sub-investment grade.
Actually, the World Government Bond Index, the big one that we were included in, that led to obviously the fortunate prospects that go with it, that relates to the local currency rating. Okay. Now, the local currency rating, even if we're downgraded, will remain in investment quality by 2 notches by Standard & Poor's measure. So that's the real doomsday one to watch.
Are we not then making a big fuss over nothing here, Louis Niemand?
You might actually argue that we're making a big fuss of it, and probably our bond market have overreacted, and a lot of variables have overreacted, but we also got to understand that credit rating on even our sovereign bonds, which only represent, as James said, a small portion of our government funding, only about 9%, it does create a negative perception towards the country. And that negative perception does put a negative tail on a lot of variables, not just on the funding costs for government going forward to fund future projects or their fiscus, but also it does put a negative perception on things like your currency. And we all know additional pressure on a currency does create then a whole ramification of other measures, which include pickup in inflation and actually a negative impact on further potential growth that we could see in the country. So a lot of fuss, probably a bit overdone on a lot of variables, but the uncertainty is, and again, I would stress, is not so much the downgrade or not, it's probably the outlook for going forward. And that, I think, should be driving the primary investment decision that you want to make over the next few months.
In your view, do we need that wake-up call? South Korea, they got downgraded. It took them 2 years to come out of junk status or sub-investment status, and they haven't looked back since. Other countries have taken considerably longer. It does depend on the sovereign's attitude, and when I say talk about sovereign, I don't mean the king, I just mean the state's attitude to the downgrade. Is it something that we need to bring us out of our slumber?
It's always good when you stray the path. It's always good for somebody to actually just bring you back on the straight and narrow. And I think that warning has already come through. I don't think there's anybody that actually doesn't know that there's a potential downgrade. So I think government officials, policymakers, business, the country as a whole have already received a downgrade. So to just downgrade us, to warn us, is probably not what the S&P actually intends to do with this, with the whole credit rating. What we do want to see is that government continues along the path to put policies in place so that if we don't receive a downgrade now, is that the S&P can have confidence by December that there's no need to downgrade. But then all that said and done, there's about 48% of all the countries in the world that are sub-investment grade. So it's not that it's the end of the world. 48 countries across the world, 48% of the countries across the world continue to survive, continue to operate. So as I always joke, and I think I had the joke previously in a previous occasion with you as well, you can still wake up the day after the downgrade and have your bowl of post toasties. So things are not that bad.
Two views from two gentlemen, both of whom are cautiously and very cautiously optimistic that we won't see the downgrade. Do we need the downgrade to wake us from our slumber? No, we don't. We've had that wake-up call, and it's come forward with the big business meetings that have been happening under the auspices of the National Treasury, including politicians, business and labour, and everybody's really getting on quite nicely. We don't need a shock to that. We don't need to destabilise that. And hopefully, S&P, you download this video podcast and watch this and pull yourselves back from the brink, as we hope to do over the next 6 months or so. Thank you so much for watching the Moneymakers for this evening, and hopefully it helps you sleep better tonight than you might otherwise have done. Good night.